Samir Arora is now joining us. He's founder and fund manager at Helios Capital. Samir, great to have you with us here. Thank you very much.
Hello.
Appreciate it as always. Samir, I want your thoughts on this, Mahindra and Mahindra RBL news flow. We reported yesterday that Mahindra has picked up, a stake in RBL, and it was confirmed. Both RBL and Mahindra confirmed it later. Although Mahindra says that under no circumstances they will exceed 9.9%. Your thoughts in terms of what the motivation could be, and as an investor, how would you look at it?
But first thing is them saying that they can't own, they in no situation will own more than 9.9. I thought that is the RBI rule, isn't it? That it's the RBI rule that nobody can own without permission and things like that. And mostly RBI would not give, as per current my thinking or our thinking, that corporate sector can go into banking or own more than 10%. So it is more a rule rather than anybody's personal commitment. But I don't know, because I don't own M&M, but because of the history where they've in the past had poor corporate allocation decisions, that's why people are so sensitive. Otherwise, it could have been taken as use of excess cash or a treasury kind of operation. But when you buy a bank, it becomes a bit more sensitive because it needs so many approvals. Beyond 5, I think, again, RBI has to come in. So I don't know what is the angle, because as of now, we don't read that a manufacturing company can buy a bank or promote a bank.
Just one point, and we were discussing this earlier. They have Mahindra and Mahindra Financial Services, right? Now, generally, the understanding is that NBFC is beyond a point. I mean, the RBI doesn't nudge, but I mean, the conversion into a bank and things like that. Could there be that as an angle? But then that would have been done through M&M Finance, not M&M.
But that is one. But second is, I thought there are these two angles, right? Even if you have a NBFC, but you are owned by a manufacturing company or by a corporate, then what happens to that rule? So I don't think it is clear. It all is case by case, I would think. So it's beyond our normal pay grade, and we don't do complicated things to earn a living.
Well, we won't have to wait too long to find out. I mean, M&M's earnings, Q1 earnings, come out on the 4th of August. And I'm sure questions will be posed to the management on this stake buy as well. Remember, M&M in the recent past has exited all their loss-making and non-core businesses. So apart from SsangYong, of course, which they exited, a lot of them, whether it was Gyps Aero, Mahindra Consulting Engineers, and a whole host of others. So this comes as a bit of a, shock. And of course, a larger picture perhaps is different. But for now, there's no explanation. So maybe that's why the stock is down about 4%.
But my thinking, I can tell you without any analysis, that you will not get any answer because these questions don't have answers, because you can't on day one say what your plan is, if there is a plan. So this is what you have, and this is what you'll get after 3 days also. Good
Absolutely. Okay, so let's move on then if there are no answers, right? Because the market is really picking up pace. It's up about 80 odd points. Samir, how are you feeling about the markets now, considering that on one hand, of course, there's this liquidity rush. There's a lot of institutional buying. But on the other hand, earnings are not that great, whether you look at, the tech companies or even some of the larger banks. How are you feeling about that?
Also. So that is true that the results have not been as good as we would like them to have a clear run. But right now, the bigger picture is that India relatively is done well and is doing well. And that there is this gush of liquidity, where in the past, at least last 1.5 years, not now, but say 2022 and half of 2021, second half, that the foreigners were big sellers. And for various reasons, they have become bullish on India. And therefore, now you have the real prospect of both FIIs and DIIs wanting to buy. Now, both may not be able to buy because that may make the market go up much more and they may back off. But in general, both the groups have money and willingness, and there is a case for them to buy. Then that is what is driving the market, or can drive it much higher than it is now. As of now, I was not broadly over impressed with the rally. If I look at it over a 1.5 year term or even calendar year to date, where it is more or less in line with what return should be. And actually over 1.5 years, in dollar terms, the returns are near zero. So therefore, there is much more to go, as it has been in the past, without having all these big macro things in our favor. And now we have good history to show because we don't want to have a case that, generally we've done badly, but now is our time. The story is we have always done well and been competitive and better than competitive in terms of giving returns as a market. And now we have these macro things in our favor, plus a preference over China. So this is the thing why it can go on for a long time.
Hi, Samir. Good morning. Samir, what's the take
Hi.
on IT space? I think the last time you were hinting that maybe some part of the bad news is in the price. Maybe, things are a little bit overdone. But you got the shocker coming from Tech Mahindra as well overnight. And that's one of the biggest news.
And Infosys.
And Infosys. Yeah,
So,
the last time you joined,
actually,
you were talking
that was
about...
a much bigger.
Yeah, that's true. That's true.
Shock.
And
So
that's
we
what
have
made the street even more
postponed
nervous.
our decision making. So we have postponed our decision making by 2-3 months because, if you go to, we were thinking, Dinshaw and I, that maybe the guidance will, that band will be reduced from 4 to 7 to 4 to 5, which is what we've been saying for a year, that they'll grow 4-5%. But to go 0 to whatever, that is beyond our normal, range that we would have ever imagined. So therefore, we move on past 2-3 months more again, we'll see. But maybe we are in the end game now, plus minus.
So maybe a couple of months down the line, you could be looking at, selectively buying IT?
Yes, if they fall or if the rest of the market goes up and you feel that, now it's 6-9 months away. But right now, the thing is that when you go from one quarter to the other with such a big reduction, and, we are only focusing on Infi because according to me, they are, the others have also had bad results. They've just said that we will have good future results. So that doesn't mean anything much. Since they couldn't even get this quarter right, to suddenly say, I couldn't get this quarter right, I'm not getting the next quarter right, but the 1 year is okay. Who knows? So in that case, to have such a big change in the top line guidance, one reason you could say is that they are sick and tired of not being able to beat the guidance. So they've just bring down the guidance so that it's easier to beat, which looks a bit odd if that is what they did. Or secondly, that things are really moving fast in a negative way for the whole thing to be brought down so much. So we have time. They're not running away. As I said, in the beginning, for about 6-9 months, we enjoyed the fact that we didn't have them. And then we are broadly saying that they are not hurting us so much that we feel like, moving around our portfolio. So we will just continue in that for 2-3 months. And then if we have to, we can move things around. Because remember, nobody's sitting on cash to buy these things. You have to sell something to buy this because something has been bought with the cash not used there.
Absolutely, and the opportunity cost of it. Samir, I want to ask about financials and pharma. So let's actually start with financials. Financials, of course, is a top overweight, and you've been maintaining that for a while. But in the context of Jio Financial, right? Does that prompt you? I've read a couple of notes saying that, we went to Singapore, met all these fund managers, and the top question they had for us was what the impact of Jio Financial is going to be for companies like Bajaj Finance, actually, more than anything else. How do you think about that question at this point?
I think it will be a 1-to-1 competition because half the things which those guys are financing, these guys are selling. So they can package half, not literally half, many of the things. So you can just package financing along with the selling part. If you're selling mobile phone, you can package it directly with the financing part for people who are approved in terms of, these guys willing to give them the loan or finance it. So it is definitely beyond a point. I think the scale of Bajaj Finance is so big that it cannot continue at the growth rates that are out there. Because if you look at any different sector, none of the sectors grew at these rates. So now if you say that the proportion of people who are getting financing is increasing, I don't believe that is also the case. If X% of people were, say, financing, buying a refrigerator with financing, that X has not gone up. And secondly, 10 more guys want to do it. But I shouldn't go beyond that because I may be interested in this stock in some way.
And who isn't, right? On Bajaj Finance. But Samir, Prashant was referring to Pharma, and that really is the place to be, right? Cipla has raised their margin guidance. Dr. Reddy's is at a fresh 52-week high despite weakness seen in their India business. So what's happening here? If someone has missed out on this party, is there still more to go? And how are you guys positioned in pharma?
We have also missed out on the party. And today only our analysts were saying that this is because of one-off and because of some RFPs, and the US guys suddenly wanted to buy some things in an emergency fashion. So we have also missed the party.
So what do you do now? I mean, do you still jump on,
Nothing.
or do you think?
You see,
of course, there's such a big. I mean, look at Dr. Reddy is up 30% in the last, say, 8-9 months, and I mean, of course, there are many other stocks which have a disproportionate gains.
That is the only way to survive. That is the only way to survive, because as long as a group, our portfolio is doing well, you can't keep running. We would have liked to have it instead of some other stock which may be up 5% for us or down. But this, there'll be this mad thing if you, for example, if you own 40 stocks or 35 stocks and some stock is doing badly and some stock is doing well. If I look at it stock by stock, I have 20 things to feel bad about maybe and 15 to feel good or whatever, and you cannot survive. You have to look at it at 35 and say, broadly we are doing okay. That means plus minus the thing is working. But any one stock somewhere will be doing very well. We would love to have it if we had it, but now we move on with what we have, because as a group we are also doing well, and that is because a large number of stocks are doing well. And your first thing should be to try and reduce the number of things doing badly, because the rest of the market, for example, is anyway going up, let's say 15% per annum. If some stocks that are to do badly, and many you will know in hindsight, but if you can reduce that, you will broadly beat that. And then if you narrow it and get a few good ones, then you beat it even more. But you cannot, for everything, compare the best performing of that period, and then you cannot handle it.
Yeah, as they say, right, comparison is the thief of joy, and we don't want that. Samir, thanks a lot.
We compare with the index. We compare with the index because the index is also very difficult for 50-60% of the fund managers to beat. So if we are reasonably beating, we are happy, and that's why you call me, I come on CNBC and chat with you. I don't care about every stock, every hour or every 3 months, because it's too difficult. We don't mind if we have those, but it's too difficult.
Okay, always great chatting with you, Samir. Lot of entertainment, and thanks for that. We'll, of course, you have a great week, and we'll wrap up the conversation on that note.